Hello, good morning. It's Monday the 13th. I'm FX Blue and this is the market brief. So, think back to when Sunak delivered his budget back in November. Tax income would have been based on their price estimates, and there is no way that the Treasury team would have predicted the rise in the forecourt fuel prices. So fuel duty will be much higher than budgeted, and that's even with the 5p cut in duty, which, let's be fair, amounted to a drop in the ocean. But anyway, this healthy budget is being totally ignored. Watch this space, I say. We may see calls for a cap on consumer fuel tax receipts. It would certainly produce a few savings for the public within the cost of living crisis. Andrew Bailey and the MPC meet this week with a rate decision due on Thursday. Most of the factors driving inflation are out of the bank's control at the moment, but they will likely hike rates by another 25 basis points. And that will move UK rates to a 13-year high. But it still looks unlikely to be enough. They may hope to just about keep the UK economy in positive growth, but CPI data is due out next week, and that's unlikely to show that inflation has peaked yet, so further rate hikes will need to follow. In the market, sterling made several efforts to break higher against the dollar last week. We topped out at 126 in the end. We fell back when US inflation pointed to the need for even more aggressive central bank action over there. We open around 122.90 against the dollar and about 117.20 against the euro. Now, over in the US, the petrol prices have soared as well. They've reached an historic landmark of $5 a gallon. To put that in perspective, though, here's some hashtag quick math. There's about 4.5 litres in a gallon and about 123 against the dollar. That means it's 90p a litre. Boo bloody who, America? You've got better than half price petrol. Let's fire up that big block Chevy because a Route 66 road trip is calling. Perhaps interlinked with the doom and gloom of $5 a gallon, US consumer confidence fell way below market expectation. We saw 50.2 in June, which is down from 59 in May. But all that's overshadowed by inflation, which was up to 8.6 from 8.3%. And that all rather stirred the pot. Will the Fed react? Odds of a 75 basis point rate hike have been slashed, and at the very least, Powell is expected to be even more hawkish at the press conference when they meet next. The dollar index was given an unexpected boost. That moves to 104.25 on Friday, and euro dollar, that opens down this morning at around 104.85. Right, well, that's it from me, kicking off the new week. Have a good one and do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.